is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Homosassa. Hey, Al, what's going on?
Isn't it wonderful? This gentleman here with the gold report, right before the market fell apart, ended up with PAAS. We had a 98% gain in a year. And, you weren't 99% proof like Irish whiskey, but we had a good gain there. You always told us to do what we feel comfortable with. And if I lose a little bit of money on the table, I will, but I know that I just pocketed $8,000 or $9,000 in 2 weeks.
That's a beautiful thing, man.
Now, Tom O'Brien.
Okay, folks, we're back. Larry Pesavento setting in for the master himself, and I've got a special treat for you today, folks. I did my regular show this morning, and my guest was Jeff Hughes of Alpha Insights, and he literally knocked it out of the park, and he's got such wonderful information. It's worth repeating, and if you haven't heard it, you're going to hear it now. Jeff, you're on the line, I think, my friend? Hopefully.
I'm here, Larry. Can you hear me?
10-4. Let's get started, Jeff. The folks are ready. They've got their pen and pencils ready to take notes. And let's start off with the credit spreads, okay? And then when you're ready to turn, let me know and I'll post a new chart.
Yeah, that sounds fine. So credit spreads really are just telling you, what does the health of the economy look like? And, I titled this slide, Credit Spreads Are Just Off the Tights. And what that really means is that, we're at near record levels of positive economic conditions. Underlying earnings have never been better. Growth has never been stronger. I was out to dinner with a really brilliant financial analyst friend of mine who was talking about the merits of understanding nominal GDP over real GDP. We hear real GDP spoken about ad nauseum in the news media because everybody's so uptight about inflation, but the bottom line is nominal growth is what drives revenue growth. And we just embarked upon a 13% nominal growth quarter in the second quarter of 2021. It's probably going to prove to be a record all-time growth quarter in U.S. history. And if we think about the implications of nominal GDP growth on revenue growth, for every 1% of nominal GDP growth, you get about 2 to 3% of revenue growth. I mean, that translates into like 40% year-over-year revenue growth. So, earnings are blowing people's minds. Honestly, we're beating expectations by orders of magnitude. The street's already raised their earnings estimates by 15 percentage points in terms of blended growth for the quarter. So, we're looking at like 78% earnings growth year over year, and it's going to beat that, okay? I mean, that's where the street is right now, but earnings growth could come in like 85% or maybe even higher than that. But the point is that that's what's driving the market. That's what's, it's this incredible economic condition. However, if we think about where we are in the cycle, and I think now is the time to talk about the 2021 cycle composite, Larry, let's flip to the next slide. What this slide does is it really speaks to three different major cycles and compiling them together. There's a seasonal one-year cycle, there's a presidential cycle of 4 years, and then there's the 10-year decennial cycle. And so if we consider the amalgamation of those three cycles together, it gives us a pretty good roadmap for how we should expect the S&P 500 to trade. And lo and behold, the market, the S&P, is actually tracking with better than 90% correlation to the 2021 cycle composite. And so what I think is happening here, Larry, is that, we're seeing this second quarter explosive growth, which might very well be peak growth for this cycle, coinciding with the market's advance. And we're not through it yet. We won't actually get actual GDP results reported until August for the second quarter. And so, what we're thinking here is the cycle composite is slated to top somewhere around the first week of August, which is next week, okay? Now, if we're going to continue this this 90% correlation to the cycle composite itself, somewhere between now and, say, a week after where it's slated to peak, we should see a peak in the market. And my view is that we're going to see a blow-off top, that we're on the precipice of experiencing a massive surge to the upside in equities as everybody piles in. Chairman Powell's on right now. They're interviewing him on CNBC, and you can see that, basically he has absolutely no intention of tightening policy anytime in the foreseeable future. It is going to remain loose as a goose at this point, and that's what everybody wanted to hear. And so, combined with the incredible earnings power that we're seeing by Apple, Google, Microsoft, Facebook tonight after the close, tomorrow Amazon, that's 25% of the S&P 500 market cap right there, and they're blowing earnings out of the water. My view is that this is going to result in an ultimate melt-up. We've been projecting a target of 4,600 for the S&P 500 and 16,000 for the NASDAQ 100, which means that the NASDAQ could go up another 1,000 points from here, and the S&P could go up, almost another 200 points. So, with that, let's take a look at the market, which is the next slide, Larry. And I don't know. Do you have any questions?
No. You're just you've got them in the palm of your hand, my friend. So when there's a question, I'll certainly let you know. The next one is going to be S&P 500 internals.
Yeah. Let's stick with the Elliott wave analysis for now and just talk about the S&P. Where are we in this progression, right? So, the market bottom last March 2020, around 2,200 or so. That pullback was around 35%. And when we broke out above the February 2020 highs, which were around 3,400, that created what technical analysts might call a potential for a measured move higher. We resolved a major base formation, and that measured move higher gets us to about 4,600 on the S&P in terms of its count. Now, we've also measured this a couple other ways. We've used Fibonacci extensions, and we've used something called equal swings, which in the chart is the blue arrows. And the blue arrows really measure the first move off the March lows into the September 2nd highs and project those off the October 30th low into what we expect to be the same range, about 4,600, give or take 50 handles on the S&P. So we've been tracking this progression all along, and we've been developing an Elliott wave count around it. And the count actually is perfect within all of Elliott's guidelines and rules. And at this point, the pullback last Monday, the low, held above what it needed to hold above, which we've called key support at 41.64. And as long as that level holds, this count is valid. And with the weekly bullish engulfing candle from last Friday, we think that sets up the market for a push much higher, about 200 handles up into our 4,600 target for the S&P. And that could happen within the next 2 weeks. All we have to do is get to the median line of the channel in order to achieve that target.
Okay. Thank you, Jeff. Stay with us. We'll pay a few bills, and we'll be right back with Jeff Huge.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. We're chatting with Jeff. This is Larry Pesavento. Hey, Jeff Hughes. We're at the Tom O'Brien Show. Larry setting in for Tom, and we have as our guest today none other than Jeff Hughes of Alpha Insights. And, folks, this guy's got some of the best stuff. We've been going through it step by step. We want to continue here because it's got some I look at these charts, Jeff, and honest to goodness, some of these I've never followed credit spreads or stuff like that, but when you talk about the flow and money and stuff and the overall enthusiasm in the market, it makes it really explains what's happening to some of these things. So let's move on to the S&P internals now. Could we do that?
Absolutely, yeah, certainly. And let me just emphasize that I've got this target of 4,600 for the S&P, and it doesn't mean that the market can't go higher than that. But what it means that if we hit that target, as I suspect in the next couple of weeks, with the cycle composite peaking, we need to be alert for a top at that point. And the market internals are really giving us the signals that we need to see in order to be aware of that. Certain things that technicians like myself look for in the market are non-confirmations or negative divergences that would develop in things like market breadth, momentum, volatility, and what we're showing here in this chart, Larry, are a couple of those. The top panel really reflects S&P 500 market breadth. Now, a lot of people have been talking about small caps not participating, and honestly, that's usually what you would expect as the market is going into a top. That's exactly what happened a year ago in August as the S&P 500 and the NASDAQ went to new highs, and there was no attendance there by small caps, and everybody was saying the whole market's being held up by 5 stocks, and they were right. And as soon as those stocks peaked, we had a pretty severe correction in September and October of last year. So what I'm suspecting is happening is about the exact same thing. We're seeing a handful of stocks driving this market. The rest of the small caps and mid caps have basically abandoned ship. And we're just, the generals are running down the battlefield by themselves with no army behind them. And eventually what happens is they look behind and they see it's just them, and they turn around and run and follow them. And that's really what this lack of breadth that exists is explaining to us here. The other thing that's concerning is that momentum itself, even as the market's making new all-time highs today, momentum isn't confirming it. It isn't making new highs along with it. And so you've got that negative divergence in momentum and breadth. And then the third one that I don't have pictured here is volatility. The VIX actually did not make a new low as the S&P made a new high. It made a higher low. And so that divergence also tells us that we're getting close. Now, the quote that I led off the entire presentation with was a quote from Paul Tudor Jones. And the quote goes like this: "There's no training, classroom or otherwise, that can prepare you for trading the last third of a move, whether it's the end of a bull market or the end of a bear market." And what he means by that is we have no idea how much further this market can go before it ultimately peaks.
That makes sense because it keeps going higher.
It keeps going higher, exactly. So, one of the things that's kind of been giving us this insight is, style box leadership. And what we're looking at here is two different representations. The one on the left is showing large cap versus small cap. And when the line is going down, large cap is leading. When the line's going up, small cap's leading. And what happened earlier from around November of last year through March or April of this year is that small caps were actually leading the market. And what's happened since about early April is small caps have fallen off and large caps have taken over. And you can see it in the momentum readings in the bottom panel of the chart, which shows just an utter collapse in the structural momentum of that ratio. On the right side, we have the exact same sort of relationship between growth and value. And when the line is going down, growth is leading. When the line's going up, value is leading. And we had this kind of nascent sort of evolution where value stocks started to outperform, but it turns out to be nothing more than a bounce at this point. And we did not get the follow through in momentum to confirm it. And it is now rolled over. Momentum is sharply negative. And so, we're very concerned about, value in small cap stocks and that lack of breadth for the market. So, we feel like we're kind of edging into this ultimate, capitulation higher or blow off top, if you will. So those are kind of the monikers that we're looking for right now.
Well, how about the sector leadership chart? Really hit the nail on the head on the first segment today. Can you repeat what this is about and how you interpret it?
Sure. So, every week we publish this chart, and this really looks at last 5 trading days, which was last week. We published it Sunday night. And, what we saw last week with this big, breadth thrust and recovery that we saw over the past couple of days was really leadership by technology, communications, discretionary, and also healthcare. And healthcare is kind of this interesting, combination of value and defensive stocks when you look at the drug stocks, and technology and growth stocks when you look at medical technology and biotech. So it's kind of an amalgamation of both. But that's what led the market. Last week, however, industrials, materials, financials, energy, utilities, staples, and real estate. So in other words, kind of the traditional value and defensive sectors kind of fell off. So we see this whole growth driver. And why would that be? Well, because growth is going to become scarce and investors know it. Because if growth is peaking in the second quarter, as we suggest, then we're going to see positive earnings, no doubt, but the rate of change is going to slow. And so people are piling into the stocks that are the safest stocks, right? The Apples, the Googles, the Microsofts, the Amazons, the Facebooks. These are companies that have, business models that generate revenue in even difficult times. That's where all the money flowed toward the bottom of the market in 2020 because people are like, well, these companies can't go out of business because they have $100 billion in cash on the balance sheet. And so it turns out that the highest growth companies are also defensives. And so what we saw when the market sold off last week and hit its lows last Monday, those stocks were strong, utilities were strong, staples were strong. And so it kind of leads me to believe that, these big cap, mega cap tech stocks are where money's going to flow, along with traditional defensives, once, people start to recognize that the end is nigh in terms of the growth cycle.
Wow, that's really good. Well, we're going to take another break here, I believe, in just a few seconds, and we're going to come back with your top actionable trading ideas that you told us about early this morning that really sort of knocked it out of the park again, because this is just such wonderful material to see and put together so professionally. Jeff, you should be very proud of your service and your organization, because you put it in a context that even a neophyte can understand, what this means. So we'll be right back with Jeff Huge of Alpha Insights, folks. 877-927-6648.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks. This is Larry Pesavento setting in for Tom O'Brien today. And we have as our guest is Jeff Huge of Minneapolis, Minnesota with Alpha Insights. And he's talking to us about top actionable trading ideas for the coming 3-month period. You want to tell the folks what you're looking at here, my friend?
Yeah, absolutely. So, Larry, what we do, our trading style is threefold. Really, we're looking for stocks that are high relative strength. In other words, they have the propensity to exceed the market's performance. And so, those stocks that are leading the market with strong 30-week relative performance and also breaking out and making new highs. That's another key. Stocks that can't make a new high can't go higher. And so by definition, and so we're looking for stocks that make a new 52-week high and close at a new 52-week high each week. And then, we just overlay on top of that some simple trend-following, momentum-based strategies. And when we finally just identify companies with, classical chart patterns or consolidations where we can see, a breakout either developing or resolved, we want to be involved in those stocks. And so what we see here is a list of 10. We publish our top 10 list every week. These are stocks that are leading the market, that have a high propensity to generate alpha for your portfolio, and they're all breaking out of some sort of a consolidation or classic chart pattern. The stock I'd really like to draw your attention to right now is Dexcom, symbol DXCM. DXCM is really probably the quintessential consolidation pattern. It's a classic double bottom base with a key neckline resistance at about $440 a share. The stock resolved above that and posted a new all-time high last Friday and has pulled back with the weakness in the market yesterday, giving just a great buying opportunity today. It's rallied sharply, I think up about $12 as we speak. But we think the stock can run to around $600. And the way we get there is we look at this double bottom base and we project the lows from that base above that neckline. And, theoretically, it's a classical technical analytical calculation called the measured move. And so that measured move should carry to that target. And, we always like to use a risk budget, right? In case we're wrong or something goes awry here. So we try and look for a level that we think the market definitely shouldn't take this stock below. Otherwise, we just don't want to be involved anymore. And that level, in our estimation, is 422. And it establishes a very positive 3-to-1 positive risk skew, which is an attractive sort of ratio. You get 3 units of reward for every unit of risk that you're taking. And that's kind of the optimal sort of combination that we're trying to find. Dexcom actually reports their results on Thursday, the 29th, after the close. The second name I want to bring your attention to is PayPal Holdings. And PayPal actually reports tonight after the close. So there's about 30 minutes or so before they report. This is another stock that's been in a nice uptrend. It's a leader in the fintech space. It's put in what I would call a small to intermediate term base. And that base is, again, resolving above a neckline around $300, which was its prior weekly closing high. And it made a new all-time high last week. It pulled back a little bit here and looks like it really wants to run. You can buy the stock for about $301 right now, and we think it can go to $395. We're using a stop loss at $280, which creates a very attractive 5-to-1 positive risk skew here. The third name that I would draw your attention to is Lululemon. Now, Lululemon.
Whoa. That's the real name of the company?
Lululemon Athletica, yep. This is a company that makes those spandex leggings that you see women wearing, yoga pants, if you will, right? So it's a very, very popular company or product that they make, and it's become a very big institutional stock. It also has put in a double bottom base formation, a very classic sort of consolidation pattern in a long-term uptrend. And we see this stock breaking out above that right now. It made a new all-time high last week. It looks to us like the stock can make a move to around $525. We're using a stop loss at $360. That sets up another 5-to-1 positive risk skew. So we think it's a very good, 5 units of reward for every unit of risk you take if you use that 360 level to stop. And then there's 2 others I'd really like to pay attention to. That one is ServiceNow. ServiceNow is an enterprise cloud computing company. Symbol is NOW. They actually report tonight after the close as well. And, this is a company that, again, similarly to PayPal, it's had this strong uptrend, and then it got into kind of an intermediate term base consolidation, which it's already broken out above the first level of that resistance, and we think it's about to resolve the entire base itself. And so if, in fact, it does resolve above that 600 level, we see the stock running to as high as 750. And we think that can happen relatively quickly. We would use a stop loss at 540, and that sets up a nice 3-to-1 positive risk skew. And then the final name I'd really draw your attention to is Twilio. Symbol is TWLO. Twilio has almost the exact same pattern as ServiceNow. The company is kind of an AI play on communications. It's actually Kathy Wood's stock, so beware. Her stocks can be up 50% one day and down 50% the next. So we expect a lot of volatility here. They report on Thursday after the close, and we're looking for this. We're looking for good news. We think the stock can resolve above 440, and if it does, it should run to around 650 or so. We're using a pretty tight stop here. We think, if the stock trades materially below 360, we would probably be wrong on this one, and we want to get out of it. But that sets up a very, very attractive 12-to-1 positive risk skew. So in other words, you get 12 units of reward for every unit of risk you're taking here. It's the riskiest stock that we're talking about today, and therefore you should get a bigger payoff. But we would emphasize that investors should definitely use a stop loss at 360. A close below 360, you want to be out of this stock. It's not going higher then.
Wow, that's really... Now, Jeff, on some of these, do you use options to protect your positions? Because, some of these things are so crazy, you don't really... how do you do it? Just put a stop in, and if it gets hit, that's it? You don't use a put or a call to protect yourself?
I don't, because you know what? Especially in these high volatility stocks, the options market is too efficiently priced. You're overpaying. These market makers are making a killing here, and so the only one who's going to get rich on an options trade is going to be the market maker.
The seller.
I'd much rather be long the stock with a stop loss at a reasonable level.
Wow, that's really good. Can you stay with us, my friend? We want to talk to you one more thing about your risk management stuff and the company that you have. 877-927-6648. We'll be right back with Jeff Hughes, folks.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Okay, we're back, folks. We're talking with Jeff Hughes out of Minneapolis, Minnesota. Jeff, tell the folks a little bit about your trade management techniques that you use and the services that you offer for folks that would like to, avail themselves of a professional money manager like yourself. So you want to give us a little heads up on that?
Yeah, I publish a service called Alpha Insights. You can find information about it on Twitter at alpha_insights or at my website, jwhinvestment.com. The service is really an institutional service, but we have a lot of professional traders and individual investors that subscribe. Our price is like $100 a month, so it's not a lot of money. We publish every single week a detailed deck like this with at least 10 fresh, actionable trade ideas and a lot of market and economic macro commentary. Once a month, we publish a big 100-page review and outlook that looks at global markets, commodities, international, equity indexes, et cetera. And it really covers the gambit of global macro sort of combination. So we look at gold and copper and oil, and we're going to add silver this month. I'm actually getting pretty bullish on silver, believe it or not. But, we even cover the cryptocurrencies. We cover Bitcoin and Ethereum. Our strategy is really, again, trend following. So we're looking to identify trends early and stick with them very long term, stay with them as long as possible, but cut our losses quickly if we're wrong. So we take a lot of shots on goal, and the ones that don't pan out, we get rid of them very quickly, 5, 6, 7% losses. But the longer term ones can run. Our average is something like 30% return on our winners. And so, you can have a very low hit rate, say something below 50% and still produce real good returns. We're actually around 50% win rate in ours. But, from a systematic perspective, we like to control risk using position size as kind of our primary driver. So we think investors should understand minimizing their risk through position size. And the way that's done is by calculating your trade MAR. We put a slide in our deck, and that slide is really designed to help people understand that you can define how much you want to lose on any given trade, the maximum. And once you've defined that maximum loss of capital per trade, just using the difference between the entry price and the initial stop loss, you can calculate the exact number of shares that's going to optimize that for every single trade. So if you only want to limit your risk to 25 basis points of your total capital, that can be achieved through this approach. And what we found that, over the 3 years that we've been publishing this, the system that we use has proven positive expectancy with a profit factor of 2.7 to 1. So it's a very profitable system, and we have a lot of institutions that follow us.
I can imagine they do, because, boy, you sure got a compilation of some great data. and you make a case for it too, which is really interesting. Jeff, one other question. How would the folks reach you? Do you have an email, a preferable website? What is the best way for them to reach you?
Sure. They can always send me an email at jhuge@jwhinvestment.com, or they can go to my website, again, www.jwhinvestment.com, or you can follow me on Twitter @alpha_insights, and you'll be able to find me that way as well.
Wow, this is good. God, I just appreciate you being on, my friend. We'll have you on again soon. Be safe out there, and thank you for sharing this with us, Jeff. It's very, very informative and valuable, so everybody here really loves it. So thank you very much, and we'll have you on again soon.
Thank you, Larry. Take care now.
You bet. Jeff Hughes, Alpha Insights, folks. You just not going to get any better information. Now, since we're talking about stocks, I wanted to bring up a couple that we've been looking at over quite a bit of time, and one of them here is one of the leaders of the Dow Jones stocks, and that is Goldman Sachs. And I want to get this up here today because Goldman Sachs is in the in the process of making a head and shoulders pattern as long as we don't get above 378. I don't know if it's done that today with the volatility we had. I don't think that we've had, but you got a perfect head and shoulders pattern. Your left shoulder higher than your right shoulder. The distance between the shoulder, the head, and the shoulder, absolutely perfect for timing. It's setting right at the exact 78% level at 377. And as long as that doesn't get above 380, I believe we're still looking at that. Can someone in the den here just give me a rough idea where we are with Goldman Sachs today? Because the Dow has moved very little. The Dow futures have just been lagging. So we are seeing, a compilation of shifting and bifurcated markets, as Basil talks about. By the way, if you get a chance, listen to Basil tonight, folks. This is last segment that he's going to do, and I believe it comes on around 4:30. Just a terrific show. 5 hours of, I think it's 5 hours. Well, I could be wrong. All I know is it's going to be very, very informative, but that'll be on tonight too. The high today was 377, so it has not taken that out. So very interesting, Danny, to let me know that it did make that high. So we'll be watching that one closely with the reports that are out with the Fed today. That stuff is pretty much out. Now what they'll do is they'll decide whether it's bullish or bearish, whoever they happens to be. Now, I would like to mention one other thing, and that is that Tom will be back tomorrow. And I sat in for 2 days, which is not an easy task to do. So it's important that we want to thank him for everything that he does. Also, I wanted to comment on the semiconductor stock that is getting absolute massacred, and that is Intel. You'll notice that we made that butterfly top up there in March up there at 69, and we broke down to exactly a 61% retracement, then tried to rally to the 382, which we couldn't do, and now it's starting to unwind to the downside. There's something wrong with Intel, folks. Either their chips are not working properly or someone has surpassed them in technology and they're using their own chips. Either it's AMD or whatever these things are. So we'll be watching. The AMD, I guess someone's saying that it is actually doing a good job of taking care of its backside. So those are just a couple of the stocks that we're looking at. And then one other that we're all looking at, of course, here is the coming virus of the week. I think that's probably what they're going to be putting on us pretty soon. We'll be doing at least a virus a month here pretty soon. You can see here with Pfizer that we are completing an ABCD butterfly pattern up here. That doesn't mean it can't go sharply higher. It certainly can, but it's got to get above 43 in order for this to break out to the upside. But that's one that's in the news every single day because of the coronavirus. And I just wonder, you hear so many different things. Sometimes you wear a mask, sometimes you don't wear a mask. I don't know. I'll be like the Lone Ranger and wear my mask when I want to. And since I have silver bullets, I'm going to be okay. And I just think I lost the internet, and I'm pretty sure I did. Anybody hear me, folks? I think I'm out of business as far as the internet is concerned. Yep, it's gone. No sound. I lost internet. Yeah. Well, you hear me. I don't know why I can't hear anybody else. The electricity just flashed. We're in the monsoon season here. We'll take a break here. We'll be right back, folks. Larry Pesavento sitting in for Tom O'Brien.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, this is Larry Pesavento setting in for Tom O'Brien. I'd like to leave you with one of the charts from Stan Harley of the Harley Stock Market Letter, who was our guest on Monday, and he showed this, the advanced decline line of the New York Stock Exchange Index. As you can see, this topped with a double top in June, and then also on July 5th. We've made lower tops ever since. That means there's more declining stocks than advancing stocks, and that's easy to figure out if you just look at the NASDAQ, because the top 10 stocks in the NASDAQ represents almost 40% of the whole NASDAQ. So when you got just a few stocks and Google, Facebook, you know, the others that are out there, Google, Facebook, Amazon, when you see these, you know, they're heavily weighted, and it's hard for a small stock to make any dent in that. So this is we live in interesting times, so I highly suggest that you use some type of a risk management tool, either a put or a call against your position, or put a stop in the markets, because sometime in the near future, between now and October, maybe November, December, one of those months, we're going to see swings that are going to scare the bejeebies out of everybody, including me, and I thought I've seen everything, including the 1987 crash. I don't think we're going to see a crash-like scenario. I think we could see a vicious bear market like we're showing in China. I think China is telling us what's coming. So we'll have to wait and see. Remember, those key figures on the Hang Seng Index are very, very important. And that's at 24,900, 24,900. We closed below that in the NASDAQ, in the Hang Seng. That's really negative, folks. We're expecting a little 3-day rally here that we'll be evaluating each day, but today's just the first day of it, and we'll keep following through. So live every day in an attitude of gratitude, and may God bless. And Tom will be back tomorrow. See you later, folks.
Building wealth trading in the